Kevin says, Ben, you've mentioned in the past that one of your superpowers is reading really fast. I'm curious about your approach to incorporating quarterly earnings into your analysis. When do you actually read through 10Qs versus stick to the summary in shareholder letters and the content of the earnings calls? How much does third-party analysis factor into your process? Can you peel back the curtain on what you do with earnings reports? So we got a version of this question like a year and a half ago, but our audience is now much bigger than it was then. So I'm curious, do you have any tips for Kevin here?
Yeah, so I maintain, with the help of our friend Dummin, basically a set of, I have an Excel sheet for every single company that has all the relevant numbers from their earnings report. And with a lot of those, I have, if I've ever made any sort of chart or graph about a company, that is maintained and it's updated with all new earnings. So
Okay.
the numbers is obviously always important. And you always want to sanity check any take you have by going and checking with the numbers and making sure like there's something there, right? There was like with Google's earnings yesterday, everyone's like freaked out about search revenue. And that's like an easy take. Oh, their search revenue is slowing down. Maybe that's because of generative AI, right?
Mm-hmm.
And oh, wow, actually their search revenue's been terrible over the last year. Is that what it is? And then you go in and like, so that's like you see the headlines before you've done anything. You're like, wow, I know what I want to write about today. And then I go in, I look at the numbers and it's like, well, actually they had a really bad year like a year ago, but that was not a quarter in which ChatGPT would have had an impact. There's other explanations that they brought up that are reasonable. There's some currency aspects. There was the COVID hangover. There was like all these sort of various pieces. And actually, search revenue growth has been accelerating for most of the year. The reason why the market might be worked up is because that rate of acceleration slowed last quarter, but what does that mean? Hard to say. And Google doesn't tell you anything on their earnings calls. So,
Right.
So in that case, that's why it's really important to, if you have a thesis, start with the numbers. Like what exactly is going on? And I have those numbers in, and I actually have one of the reasons I keep my own Excel files instead of using someone else's is I have lots of stuff formatted in those to make charts in the way sort of I want to, relatively quickly. And so I won't get into the details, but that's number one. Always.
Okay.
The numbers are the core. Number two, I do always read the earnings call transcripts. I read the investor letters, and that is usually what I'm the most focused on. The issue with 10Qs and 10Ks is they don't change very much. I've read mostly all of them of the companies that I've written about at some point, but I'm not necessarily doing a diff on them. That said, search is your best friend, right? So like, with Microsoft, I knew there had to be something in there about the OpenAI scenario. And it took a while, but in the risk factors, they had added a new line that said some of our partnerships, we don't have any control, and that might impact our ability to deliver products. Right?
You may have heard.
That's right. So it took a while to find that one, but every quarter, I'm not rereading a 10Q every quarter. Like that's not, given the level and frequency of my posting, that's not viable, but I've read them at some point and I use search a lot. So that's my process. I'm most focused on management commentary. And I think I've been clear about that. Like I like keynotes, I like earnings calls, I like investor letters, and yeah. So, and this is part of, to be totally honest, this goes into I'm not making stock recommendations. I'm not putting a price on the stock and saying buy or sell sort of XYZ. And if I did do that, I would, one, write much less, because two, I would be doing I would charge more, and three, I would be, every single quarter I would be reading that 10Q from top to bottom to make sure I didn't miss anything.
Okay, that makes sense. One follow-up question. If you were transported to the SEC and were in charge of regulating the reporting process, is there anything specific you would change in the way this is done every quarter?
Yeah, I would enforce the law, which is that you're supposed to report profit and loss numbers for subsidiaries that report to the CEO. Like I think Google's should be reporting YouTube's profit and loss numbers. They're not. It was one of the rumored reasons for why the Alphabet structure came about is that Google wanted to obfuscate sort of their stuff, and and because Google reported to Larry Page and other bets reported to Larry Page, and so they could get away with just reporting a Google number. Once Sundar Pichai was the CEO of Google and then became the CEO of Alphabet, YouTube now reported to the CEO. And that like those numbers should be broken out in their earnings. And so like a couple months or a couple quarters after, like, okay, we're breaking it out. Here's YouTube revenue. That's not P&L. That's just revenue. Like you can't, you actually need the costs associated with it. And they don't do that. And I think they're supposed to. And there's a reason companies don't want to, right? Like, probably the most famous example of this was when Amazon reported AWS numbers. And they had to do that because it was becoming a material part of their business. It was a separate division that reported the CEO. Like they're like, as I understand it, there were like regulatory reasons why they had to finally sort of break that out. And on one hand, it was beneficial to Amazon because everyone's like, holy cow, this is a massive business. I wrote an article at the time called the AWS IPO. Like this is like an IPO level event. It's a huge deal. And their stock took off like crazy. So they benefited from breaking that out. On the other hand, that was probably the event that really kicked both Microsoft and Google into gear as far as competing with AWS, because it's not some little thing on the side. This is a massive business that we should be investing in. And I think for Google in particular, which has had the hardest time to break out of search, this finally got them to meaningfully invest in an alternative business over the course of many years, because AWS showed it's very viable. And I think there's and I think there's folks that, some late stage startups that don't want to go public, for example. I don't think they want to report it. I think they think their business is better than other people think, and they don't want to inspire competition. And I think that's the same thing with these big companies and some of their subsidiaries.